Get your free copy of the complete tutorial at www.teachucomp.com/free. In this chapter, we will discuss the contents of financial statements in a broad sense. Further information on each component will be discussed in later chapters. The first important financial statement is the balance sheet. A balance sheet is an accounting tool that shows a company's financial position at a certain point in time. A classified balance sheet groups together similar assets and liabilities and makes it easier for the user to read. Classified balance sheets help managers determine if the company has enough assets to pay its current debts as they are due, and also the claims of creditors on the company's total assets. Balance sheets should be balanced and filled out correctly, with the correct category for each transaction. A classified balance sheet will have assets and liabilities and stockholders' equities grouped together. Next, we will go over the different types of assets and liabilities and how to accurately record accounting transactions. Recall that the basic accounting equation is assets equals liabilities plus stockholders' equity. This equation must always balance, and this is why we call it a balance sheet. Next, we will discuss the different types of assets and liability accounts. Current assets are assets that a company or organization expects to use within 1 year or the operating cycle. Examples include office supplies, yearly insurance, and inventory. Long-term investments are investments that will be held for longer than a year. Examples include stocks, bonds, land, or buildings. Property, plant, and equipment. These are assets with a relatively long useful life that are being currently used. Examples include buildings, vehicles, furniture, and land. Most of these items are subject to depreciation. Intangible assets are assets that are valuable to the company but have no physical state. Examples include customer lists, brands, trademarks, rights, and goodwill. Current liabilities are liabilities or debts that the company is obligated to pay within the coming year. Examples are rent, accounts payable, and wages payable. Long-term liabilities are obligations that the company expects to pay after 1 year. Examples include mortgage payable, long-term notes payable, and bonds payable. Stockholders' equity contains 2 parts: retained earnings and common stock. Common stock is recorded as the investments of assets into the business by stockholders. Retained earnings is recorded as the income retained for later use in the business. There are many more accounts that can be found on the balance sheet. However, these are some of the biggest and most important categories. Next, we will discuss how to use the balance sheet to interpret financial information. Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.